Today's Talk About It Tuesday question is, the current war in Iran has already sent gas prices soaring and created some volatility in the stock market. Should we start making changes in our investment strategies now so that we don't lose more money? Okay, this is a great question, and a lot of people have concerns because we are seeing gas prices soar astronomically, and we are seeing some volatility in the stock market. But we have to look historically at geopolitical events, particularly war, creating surges in gas prices and volatility in the market, but temporarily. So if we look at the first Gulf War, if we look at the war in Iraq, if we look at the war in Afghanistan, if we look at more recently the Russia-Ukraine war, the Israeli-Palestinian war, if we look at those events, we also saw rises in gas prices, and we also saw some dips in the market because the stock market is very sensitive to uncertainty and change. And of course, anything in the Middle East is going to impact energy prices, particularly oil-based prices. So we also have to look at our investment strategy. The reason we create a strategy is so that we don't make emotional moves. If you invest emotionally, I promise you, you will lose because you'll be going up and down, chasing everything that makes you uncomfortable or comfortable, right? You can chase it either way. When we look at a longer term strategy, and when I say long term strategy, I'm talking about your time horizon. So if you are considering 10 years, 20 years as your time horizon for your investment strategy, what's 2 months, 3 months, right? And not to say that we can accurately predict how long the conflict will last in Iran. But if you think 6 months, 7 months, even 12 months, 12 months of volatility in a 10-year strategy is nothing. It's nothing. And can we accurately say that it'll be a short situation? Not really. Nobody expected us to be in Iraq for nearly 9 years. Nobody expected us to be in Afghanistan for nearly 20 years. However, it didn't take 9 years or 20 years for the market to get comfortable and not only restabilize, but actually begin to accelerate again as if that was a non-factor. So again, in our long-term strategy, I would say not an issue. Now, let me preface that. If you are close to retirement where you need that money, then perhaps you reorganize or reweight your portfolio. Perhaps you're overweighted in the energy sector, which, can take the biggest hit right now because of, what's happening. Then maybe you shift to other safer areas like consumer staples or something like that. So if you're close to retirement, maybe you don't want to be so heavily weighted in energy. If you are not and you have a long-term horizon, you could consider this a buying opportunity because the companies aren't doing poorly. It's just events are really making, the prices go down. That means you can buy it on sale. So if you wanted to buy extra at a lower price, absolutely a buying opportunity. Other than that, just stick to whatever your strategy is. Right? If you do dollar cost averaging and you just been putting in a certain amount every single month, then keep doing that. Don't change, because that's why you dollar cost average. That's the whole point of it, right? I don't think you should chase things in the market, but like I said, if you did have a little extra money, it could be a good buying opportunity. But if that's not your strategy, I don't think you should do that. If you don't have an emergency fund on hand, maybe you can cushion it a little bit more. But I wouldn't even say it's an emergency fund. I think you need a little more cash on hand to offset some of the surges in prices. So we are seeing some increases in gas, which could then trickle over into prices of everything, meaning food and anything that gets delivered by air or truck, even things that by ship, because there's some issues with shipping lanes and whatever. You might see an increase, a surge, at least for a while, in prices. So should you have a little more cash on hand? Yes, probably. But that's not an investment strategy. That's just another financial strategy you should probably do. But as far as changing anything else in your investments, I wouldn't do it because, again, this is a little blip in a long-term strategy. So I'd like to hear your thoughts on it. But please like, share, subscribe, keep the questions coming, and I'll see you next Tuesday.